While Australia may have dodged a recession, what's ahead for our property markets and our economy? That's what Dr. Andrew Wilson and I are going to discuss in this week's Property Insider video. Dr. Wilson's also going to give us the latest information about how many properties are being listed and sold. And there was a bit of a surprise in that. What's happening to rentals around Australia? What happened to the beginning of the spring auction market? And some information about the latest finance figures and building approval figures. Lots of information in today's Property Insider video. So if you'd like to keep up to date with what's happening in our markets, why not subscribe to this YouTube channel and click the little bell icon to be kept up to date every time a new show comes out. Australia may have just sidestepped another recession by the skin of its teeth after recording a small uptick in GDP over the June quarter. Look, after an initial miracle V-shaped recovery, our economy did a U-turn as much of Australia was locked down at the end of the June quarter. And economists seem united about the outcome of the current September quarter. We're going to be seeing a steep drop in economic output. Now, when it comes to assessing the health of an economy, the official definition of a recession is 2 consecutive quarters of falling GDP. But many would argue that you can have a real-world downturn, a recession, so to speak, without 2 quarters of falling GDP. And last year, even though there were 2 falling quarters of GDP, it was really a really short recession, wasn't it? Now today, lockdowns keep being extended, Australia's in an economic slump, many small businesses are doing it tough, and we're experiencing a fall in economic growth and employment. Last year, the Reserve Bank eased monetary policy and the government provided fiscal stimulus and a variety of grants and supports to spark an economic recovery. Interestingly, this time round, the government and the Reserve Bank seem to be sitting on the sidelines. Nonetheless, our housing markets remain resilient and they keep bounding along. So what's next for Australia's economy? What's next for our property markets? There's some of the questions I'm going to be asking Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, in this week's Property Insider chat. Hello, Andrew.
Yes, hello, Michael. And I think it was actually a very good result, the June quarter GDP numbers. If we look at the actual 0.7% growth over the quarter, that was one of the strongest we've had, notwithstanding the adjustment over the past year from our recession that we had. When we look back prior to COVID, 0.7% is quite a strong result over the quarter. We still have some adjustment happening in terms of the stimulus packages that inflated our economy post-lockdown last year. But again, and I guess it's almost a truism that the expectations were not as bad as they were. The economists got it wrong again in terms of underestimating how strong the Australian economy was. But it was a good result, Michael. And look, we really know that June quarter didn't have a lot of negative energy in terms of lockdowns. That will come over the September quarter. And I think it's interesting when we do look at the data that net exports actually took away from GDP over the June quarter. And that was a result of a weaker mining sector, particularly iron ore and coal, which has been a positive for our economy over the last year. So interestingly, that it was all about government activity, and particularly, of course, a new dwelling activity was an important factor, reflecting that HomeBuilder initiative from last year. New dwelling investment has been very strong and continued to be strong over the June quarter, as was consumer buying and government spending as well. And interesting, we didn't sort of ride off the export sector. It actually had a negative impact. So it was actually quite a good result, Michael, and quite a strong result. But we've got to understand there's still a little bit of catch-up happening there, as HomeBuilder shows us, from the adjustments and the stimulus packages that we instigated last year. And you spoke about sort of the theory of the recession. I don't think we really had a recession last year, to be quite honest. I mean, technically we did, but we went down just 0.3% over the March quarter. And then, of course, we went down dramatically by 7% over the June quarter. And then we just kept growing. And now we've sort of have an argument to say that we're back on the real side of the equation. We've had a good, strong result. And I think the other thing we need to understand, Michael, when we're talking about the economy, is this time we're actually coming from a stronger position with our severe lockdowns that we have in New South Wales and Victoria. We have an unemployment rate that's nearly a full percent lower than where it was when we entered lockdowns a year ago. We still have near record level participation rate. And we've had a lot of jobs that have been created as well over the past year. So we are actually coming from a stronger position, clearly, significantly strong position moving into this September quarter, which will no doubt challenge economic growth severely as it did over the June quarter last year.
While the government and our federal budget is in a good position, household budgets are doing pretty well. Also, the household saving rate dropped a bit from, a very high 11.6% in the March quarter to still 9.7% in the June quarter. So we're stashing our cash, even though it seems like we are spending a little bit more nowadays.
Well, it's interesting, Michael. We sort of reversed that savings ratio over the last couple of years. We were having a very low savings ratio, and that reflected the difficulties in supporting our households. And we weren't saving because we had to spend to survive. But obviously, the mindset changed when we moved into lockdown, and that savings ratio has increased sharply since then. And of course, that's the prudent mindset of consumers concerned about the outlook with the COVID restrictions. But we're definitely in a better position now than we were prior to the lockdowns last year. But that still will have a significant impact, particularly given how severe the New South Wales lockdown has been, and of course, significantly more severe than it was last year. And now we have Victoria joining that in. So more than half the economy is now in severe lockdown. And of course, other factors with other states that aren't in that, don't have those same experiences that New South Wales and Victoria do at the moment in terms of restrictions. They're being impacted by what's happening in Victoria and New South Wales, particularly in terms of interstate travel, particularly tourism, which is a big driver of that Queensland economy. We should start to see negative growth over the September quarter, but of course the hope is that we can open up quite quickly as those vaccination rates become at the levels which we've been told that we're going to get back to more of a normal economy.
Well, that's the intention of at least a couple of our governments. Now, a moment ago, we said we're saving. On the other hand, we've actually been borrowing as well. And even though there has been a seasonally adjusted decline in the value of home loans in the latest figures that we've got up here from your chart from My Housing Market, overall, we're still borrowing quite a lot. Over $1 billion a day of money's going into our real estate markets.
Yeah, the ABS released the July loan data last week, Michael, and even though the ABS reported a slight increase in lending, if you take land sales and renovations and alterations out of the mix, we did have another slight decline in lending, seasonally adjusted, and we aren't surprised at that. And we know that affordability barriers are really starting to stretch buyers' capacity. And we will see lower activity, I believe, going forward, and of course exacerbated by shutdowns. But we're still significantly higher than where we were a year ago. This is a very, very strong cycle, Michael. We're still very much at near record territory in terms of lending, particularly for owner-occupiers, which are in this market over the last 12 to 18 months. And it will continue, notwithstanding the interruptions that we'll get from COVID, and mainly they're physical interruptions rather than impacting the underlying nature of the cycle. When we look a little closer, it's the usual suspects in terms of the types of buyers. We saw, again, another sharp decline in first home buyer activity, but we saw the reverse of that, another quite a healthy result in terms of growth for investors. So investors to some degree are taking over from first home buyers at the moment. In fact, the loans for established homes increased over the month as well.
In other figures that were released last week, the Australian Bureau of Statistics released its monthly building approval data, and not surprisingly, dwelling approvals declined. We had that huge boost last year with HomeBuilder, and that's now wearing its way through. So the approvals have come through. Now the construction is going to commence in the coming months. That's also going to support our economy as all those housing approvals get constructed.
Yeah, absolutely, Michael. And that's what we were speaking about in regard to the GDP figures, that dwelling investment will continue to support GDP even during lockdown. Yeah, look, building approvals, similar story to home loans. They're easing, but still at a very high level, particularly compared to a year ago. But it is the end of course, HomeBuilder has finished, and we're seeing the result of that of course, coming through. Interesting, when we look at the drop down, of course, new houses are declining as a result of the end of HomeBuilder. But we've seen some revival in apartment building, Michael, particularly,
Yes.
which is interesting. And I think that's a good sign going forward that the apartment market is starting to revive.
Over the weekend, it was the first spring auction weekend. And spring did sprung because the auction results were pretty good.
In fact, all the results were promising for the first day of spring. The spring selling season is upon us. And if we look at the numbers, they were interesting. Actually, Sydney had the highest number of auctions. And of course, auction numbers are about half where they were prior to lockdown. But still, it had the highest number of auctions for an opening day of spring since 2018. So the numbers actually, because we've had very big numbers this year, of course, Michael, and we've been used to seeing over 1,000 properties per week in Sydney going under the hammer. And when we've dropped down as a result of lockdown, of course, to under 500, it sort of looked obviously a little different to what we were used to. But those numbers in relative terms are quite high, what we've used to being seeing in Sydney on the first day of spring. But interestingly, in Sydney, Michael, we had a record result for the first day of spring. That's the highest clearance rate that Sydney's recorded on the opening day of the spring selling season in its history. So when we put it all together, it's certainly still a market where there's a strong appetite for buying property. It's just constrained by the lockdown issues. And of course, Sydney can still inspect properties. I think Melbourne's changed its regulations once they get to 70% vaccination. They're going to allow single inspections. But I think that when you read the fine print, you're only allowed to inspect an unoccupied house. Now, I don't know whether that means it's nobody's in it at the time or nobody's actually living in it at all, because there's not a lot of properties that are vacant.
Vacant, yeah.
Yeah, most of them have people living in them. So if that's what it means, it's not going to make a big difference to Melbourne. But Melbourne bounced back. It reflects more the methodology than the market. We had a very low clearance rate the previous weekend, of course, the lowest for the year. But that was because we had 60% of properties advertised or reported were withdrawn from auction. And that always pushes the clearance rate down. Now, we had a much smaller number of properties scheduled for auction in Melbourne last weekend. Of course, we're now reflecting the lockdown environment, whereas previous weekends have reflected decisions that were made prior to shutdown in Melbourne. But the withdrawal rate was much lower. So that actually acted to push up the clearance rate in Melbourne. And interestingly enough, Michael, if we just look at the number of sales in Melbourne on those 2 weekends, they were quite similar. And the actual clearance rate, if we just look at passed in versus sales and ignore the withdrawals, the clearance rates were still high, even though there was only around 200 properties that were sold on the day or sold or notified as sold. There wasn't a lot of difference between the market on those 2 weekends. And yet the clearance rates were significantly different. So that can be a little misleading in these circumstances. But the other markets, Brisbane had a big weekend for numbers to start spring. Another very strong clearance rate in Brisbane, Michael. That market's been a real super performer this year, as we've discussed. Adelaide maintained its position. Clearance rate's down a little in Adelaide, but still obviously very strong for sellers. And Canberra now looking at some of the impacts of lockdown there with a sharp decline in auction numbers in Canberra, and that's likely to continue until they get their COVID issues a little bit more under control. And their clearance rate was the lowest for quite some time, Michael, again, reflecting withdrawals, but still quite a strong clearance rate.
Well, how many new houses are coming on the market? How does it look compared to previous months now that we're starting to learn to live with these conditions?
Well, that's the interesting thing, Michael. We're looking to have formed a base. When we look at new listings over the past week, we've actually seen a rise in new listings nationally coming through. I think we've found our base now in terms of the dip that we had as a result of the lockdown. And we're now getting back to where we were prior to lockdown in terms of new listings. And just reflecting on the daily listings, which I looked at this morning, they've really picked up over the last week. And we can see that also having dropped away from where we were a year ago. In fact, we fell away below where we were a year ago over the past couple of weeks, Michael, but we're now starting to recover. When we look at the capital city performances in new listings over the past week, we can see a big rebound in the Melbourne market in terms of new listings, but growth also in Sydney. Now, these numbers, because of shutdown, tend to be quite volatile on a week-to-week basis. But when we look at the comparative position of new listings coming through, we can see Sydney is now well ahead of Melbourne, and that really shows us the comparative position. Even though Melbourne has picked up over the past week compared to Sydney, it's still tracking at around about half the new listings coming into the market that Sydney is. And typically Melbourne has similar numbers of new listings on a week-to-week basis. Now, firstly, that obviously shows us the impact of a severe lockdown in Melbourne. We've discussed that before, inability to inspect properties. And of course, sellers have more skin in the game, so they're more reticent in lockdown to come into the marketplace. But we have started to see a base, which is interesting there in Melbourne, with Melbourne picking up still at low levels. But Sydney still remains quite clearly the strongest of the capital city markets in terms of listings. If we look at new sales, Michael, as well, we're seeing a similar scenario. The national new sales have just started to look like they've also found a bottom, found the trough, I guess we call it the lockdown trough. Over the past week, we've seen rises in Sydney, a dip. Again, these weekly numbers can be volatile. And Melbourne, interestingly, new sales in Melbourne were flat over the week. Again, good signs there that the market's found its base. And the relative position is very similar for sales in Melbourne compared to Sydney, around about half the number of sales reported last week compared, and this is total sales, not just auction sales, reported last week compared to Sydney. But I think the big picture is for new listings and new sales, Michael, and I think that weekly data set is quite instructive in terms of telling us what is happening in the market. The monthly data, when we put that all together, tends to even out that volatility, and we'll look at that in weeks to come. But certainly we're looking like we've formed a base now in the depths of lockdown, and that our property markets are set to move on.
What about the rental markets? How are they coping, Andrew?
Certainly, there's no doubt that we're looking towards a shortage of rental properties, particularly houses, across the board. And I think what's quite interesting this month, Michael, and it's a little counterintuitive, is those high vacancy levels for units in Sydney are now certainly moving significantly downwards. In fact, unit rents increased over the year in Sydney by 1%. We haven't seen that for quite some time. So we are interestingly seeing an emerging shortage of all types of rental properties in capital city markets, Michael, not just houses, but also units, which is interesting given that we are in the lockdown environment, that we don't have open borders for interstate travelers, business travellers and tourists to soak up some of those Airbnb properties. But I think this just reflects that underlying shortage of rental properties we have been discussing. But if we look at rental increases over the year, everywhere but Melbourne, for houses has been very, very strong, particularly the smaller markets there. Brisbane and Perth, over double-figure growth in annual house rents. The interesting thing with Melbourne is that it's continuing to record lower house rents, and I think this may be a reflection of some of those migration patterns that are becoming even more evident out of Melbourne, putting down pressure on demand in some areas for houses, and similarly for units. In fact, Melbourne's the only capital which has lower rents for both units and houses over the past year. So the big picture for the rental market, Michael, is despite lockdown, and lockdown obviously restricts the churn of property movements in the rental market, we're seeing that underlying shortage of rental properties starting to push rents up across the board, even in the Sydney unit market. And the trend for vacancy rates in Melbourne is also downwards in units and has come down quite sharply. We've been discussing the outlook for the rental market being one of shortage of rental properties and higher rents. And it's interesting, Michael, that's really exacerbated that trend by the fact that even in shutdown, we're still seeing higher rents and lower vacancy rates.
It's interesting how some of the trends we thought may emerge with less migration, more lockdowns, even difficulty moving from one state to another. Our housing markets have remained resilient. Prices have gone up. In general, rents have gone up. So some counterintuitive things happening.
Yeah, and I think the big picture for the rental market is the fact that that investors had to confront that a really questionable credit squeeze from 2015 onwards. We saw record low numbers of investors in the marketplace. It has started to recover now and is starting to move back towards long-term average levels, Michael. But that undersupply of rental properties is clearly now having an impact on rents. And that's a direct factor of the constraints that investors faced over the past 5 years. And it's just ended up, and it's very difficult to reverse that in the shorter term, particularly to reverse a shortage of rental stock. And I think that's what we're facing now at the moment, Michael. And you can imagine if we had have had open borders, just what we would have been confronting. And that's something we have discussed prior to COVID, that the outlook was one of definite housing shortages. And it's only been shut borders that have stopped us having, I believe, a severe shortage of rental properties. And we have one now already.
Well, we saw with the recent statistics that there are more apartments in the pipeline. It'll be interesting to see how many of those are the new build to rent complexes where there'll be a whole lot of rental apartments coming on the market.
Yeah, I'm still not a great supporter of build to rent, Michael. I think it's just public housing by another name. And the governments have to have a pretty significant buy-in for these projects to work. So, and I'm not sure people are happy in living in communities which are specifically designed for tenants, and they can tend to cause sort of enclaves of perceived disadvantage and second-rate accommodation. I think people still aspire very strongly for home ownership. We've seen that in spades over the last year or so with waves and waves of first home buyers coming into the market.
Well, thank you, Andrew. Lots of data today. And on balance, it's good news, isn't it?
Yeah, absolutely. In terms of the economy, we're coming from a stronger position confronting what will be significant issues with lockdown. And in terms of our housing markets, they're moving through, I guess, the first negative phase of adaptation to lockdown. Sydney's clearly showing signs of that. And Melbourne itself also, which of course has come in a lot later, is also showing signs of stabilising. Although the restrictions in Melbourne are a lot more onerous for buying and selling compared to Sydney, although there seems to be some moves to make that a little bit better. But there's no doubt that when we looked to the Melbourne market last spring, Michael, it was just a desert. There was just no transactions at all. We're still getting transactions now. So when we compare that a year ago to now, it's certainly a market with more life in it and more activity in it. So we can be a little bit more hopeful. And of course, the lockdown mantra is now finished in Victoria. They're now joined New South Wales in conceding that vaccination is the way out of this constraining circumstances.
So there's a light at the end of the tunnel, even though the tunnel may be a bit long. Look forward to catching up with you again next week, Andrew.
Thanks, Michael.